This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial endowment expert, Harold Siegel. We're taping our show on December 29th, 2016 at 9 a.m. Mountain. Radio show runs on 630 CHED in Edmonton, Sunday afternoon at 3. This is our first show of 2017. Happy New Year. We are back for another year. Thank you for listening to our radio show and supporting us in 2016. And 2017 is going to be another amazing year. Remember, if you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. We're also on TuneIn. We have our very own YouTube page, and as well, 630 CHED is on Apple Music. You can listen to 630 CHED on Apple Music, which is an added bonus. We're there for you anytime you want to hear the radio show. We're on Sunday afternoon at 3 on 630 CHED. Next week, January the 8th, we will be on from 2:30 to 3:30 as the Edmonton Oilers play the Ottawa Senators. We will be on before the Oilers game. It was an outstanding 2016 for those that took advantage of Harold's advice, and that was get into the U.S. dollar. And we have a story, and this is from Macquarie Group, saying that the Canadian dollar could go down to 65 cents. We'll give Harold an opportunity to give us his first commentary of 2017, and then we will come back and talk about a 65-cent Canadian dollar. Happy New Year to you, Harold, and welcome to our first show of 2017.
Well, thank you, Randy, and Happy New Year to you and to all our friends and listeners out there. I hope you had a great holiday season, and we're looking forward to a phenomenal 2017. Where 2016 could have been a confusing year for most, we saw a trend that actually worked out tremendously well for us, which was the trend in the U.S. dollar versus the Canadian dollar and other currencies, along with the gold market. So all in all, what we continue to see happening is that the U.S. dollar is going to strengthen. We saw in 2016 at the end in December, we did see that the U.S. did raise interest rates. The U.S. is the only country in the world that could raise interest rates at this point. And the fact is that we could see 3 more of them coming in 2017. So what that's basically going to do, we're going to see a rally in the U.S. dollar that has been going on now for the last several years. In fact, it's been about 4 to 5 years now that we've recommended to our Canadian clients to get out of the Canadian dollar-based investments and put your money into U.S. dollar-based investments. In fact, we've been very fortunate to have private investments that our Canadian clients have invested in that are all based in U.S. dollars. So not only did the investments work out well, but we picked up a fortune on the currency market, and that is going to continue in 2017, except maybe even stronger than we imagined for 2016. So what we see happening now that we've broken par and been above the par level in the U.S. dollar for over a month now, we're really trading at 103. One of the major recommendations that we did make was that the euro and the U.S. dollar would not only be at par, which they're pretty well at right now, but the U.S. dollar is going to overtake the euro and every other currency. And we continue to see that happening. So our recommendation is to continue to buy and stay in investments in U.S. dollar-based investments. We see not only the U.S. dollar going to 110, but possibly higher than that. So that would make our investments even stronger. It would make the returns to our clients even that much stronger. And when you add to the fact that the U.S. dollar is going up substantially, probably to the highest level that it's ever gone to, and then you look at the Canadian dollar, and as Randy just said, some people are predicting that the Canadian's going to go to 65 cents. Well, we predicted that 2 years ago, and we're pretty well positive that that is going to happen. So we could literally see almost a 50% return just on our currency investment alone, let alone what our other investments are making for our Canadian clients. So That's something that you definitely want to look into the new year. If you're sitting in retirement savings plans or sitting with money in the bank or sitting in stocks or anything like that, you need to get out of those investments as quickly as you possibly can, because for the last decade, nobody has made money in the stock market. In actual fact, 90% of the people that trade stocks lose their money. So why in the world would we recommend that to our listeners and clients and friends? So again, that is not something that we're going to recommend moving forward. Now, in the United States, it looks like the stock market could continue. If the Trump, government does well, then we should see that the stock market in the Dow Jones is going to continue to rally. However, it's still extremely difficult to make money in that market if you don't know what you're doing. To pick individual stocks is a real crapshoot. So we're not recommending that. We're not recommending trading stocks and mutual funds. We're not recommending trading in the very highly leveraged commodities markets. We think that's a major mistake. What we do recommend is being much more conservative, to make certain that we're in the right investments that are going to pay us in the right currency. And the right currency to be in is the U.S. dollar. So going into 2017, allow me to show you how to do that. Allow me to show you how to get out of a weak Canadian currency, to get out of stocks and mutual funds and that type of thing, and get you into the type of investments that are going to make you whole again, that are going to give you opportunities in 2017 and beyond in order to make a healthy return on your invested dollar. So not only do we anticipate making 50% return on the currency, but we also anticipate making over 25% a year return on our investments that are private to my company. So my clients could be looking at returns that are so far from the normal, and I don't want you to get afraid of the fact that there are people out there making a lot of money. You just need to know how to do it. And to stick with conventional investments that people are in right now, like stocks, mutual funds, retirement savings plans, that type of thing, you don't want to be in those markets. You will never, ever make money in those markets at this particular point. On top of that, if the Canadian dollar is going to drop, to 65 cents, that's another 10 cents from where it is right now. That's a massive drop, and to let that happen and not to make money on it is criminal. So we need to make certain that we're in the right market at the right time, because let's face it, if you ever want to retire, you're not going to do it by keeping your money in a retirement savings plans in Canada. That will never happen for you. And number two, you also need to know that by keeping your money in the bank at 0.5% and soon to be negative interest rates for Canada, you need to get out of that. You can't keep your money in the bank at this point. You can keep enough money in the bank to pay your bills, but not to look to make any return, because you're losing money by keeping your money in the bank at 0.5%. Because once you pay your taxes and once you look at inflation and everything like that, you're literally losing money. Soon, interest rates, like they are in Europe, are going to go negative. What that basically means is you're going to have to pay the bank for them to hold your money. How ridiculous is that? Throughout our entire life, that has never, ever happened. We've always put money into the bank for safety. We've always gotten a return in the form of interest, and that's what people do. Let's face it, when interest rates were at 10%, you could literally retire just having your money in a CD or something along that line, but those days are long gone. Right now, you'd be lucky to get a 0.5% or 1% return on your money, and there's just no way in the world that you'll be able to retire on that. Meanwhile, my clients are in U.S.-based investments, which means that we're making 30% on the currency and soon to be 50%. And then on top of that, our private investments are returning 25% or more. So our clients going into this new year are looking to do tremendously well. The other thing that you should be looking at this point, and we're bullish on gold for the longer term, the intermediate to longer term, but the short term, we're bearish on gold. In fact, we've been bearish on gold ever since it hit 1380. And that was earlier in the year. In fact, at the beginning of the year, at the beginning of 2016, the gold market was trading at $1,050. It made a massive move and went all the way up to 1380. So we saw a 30% increase in the price of gold at the beginning of the year. And at that point, most analysts were very excited and were saying that gold was back on its way up to 2,000. Unfortunately, that was not the case. And not that I'm not a big believer in gold, because I am. But you also have to understand that gold's going to go through its cycles. And when gold was at 1380, we saw the opposite of what every other analyst was looking at, and we put out a sell signal on gold. We said gold's going to go down to $1,050, and that's basically where it's going. In that fact, it went from 1380 all the way down to 1120. It's bounced off that over the holidays because there's no trading going on at this point. Most traders are not even in. So we saw gold sitting right now at about 1135, 1140. There is absolutely no doubt in my mind that we are going to break 1100 fairly soon. And then on top of that, we're going to see the gold market drop back down to 1050. Now, there's a direct correlation between gold and the U.S. dollar. When the U.S. dollar is very strong, gold is going to weaken, and that's what's going to happen going into 2017. So I do predict that we are going to see gold back down to 1050, and it's also very possible that if gold breaks 1050 and the U.S. dollar breaks 110, then look for gold to possibly go to $900. So we're going to keep you up to date on our play in the gold market, on oil, on currencies, on everything else. But at this point here, just to sit there and watch it happen and say, boy, I wish I would have taken his advice, is not going to do it for you. You need to get up and you need to do something at this particular point. Just sitting there and watching these markets going in the direction is not going to make you any money. You need to get up and you need to make this move. And I know for some of you, and we're all Canadians and we're all proud of our country, but we have to be realistic at this point. The fact is that the Canadian dollar is going to drop substantially further, and if you sit there, you're not going to make any money. You're going to lose money, and we cannot not afford to do that at this point. So please, moving into the new year, we'll be back in the office by the 3rd. Give me a call, and I will spend as much time with you as you need explaining what our programs are, explaining what you need to do in order to get out of bad investments and into stronger investments. And believe me, we have plenty of time. That's the way we see 2000 for my clients. Again, at this particular point, most companies are not making money for their clients. People are in traditional investments of stocks, mutual funds, retirement savings plans, but things, and none of those are working at this point. So again, if you would love to retire one day, if you want your money to be able to work for you, you need to pick up the phone and call us so I can let you know what you need to do, what investments you need to get out of, how to convert money into U.S. dollars versus Canadian at the right time in which to do so, and when is the right time to get involved in gold. And gold does go to 1,050, which I'm 99% sure it's going to do. That's going to down to about the 1,350 level. At that, put your gold and silver and do not leverage it. When it's time to buy gold and silver again, I will let you know, and I will allow you to buy gold and silver at costs that nobody else would do for you. We own our own mines. We are partners in a massive mine in South Africa, and when the time is right, my clients will be able to buy physical gold at the bid price, not at the ask price, but at the bid price with no commissions. So when the time is right to make money in gold and silver again, I will show you how to do that, and I will make it available to you at prices that nobody else would be able to sell it to you for. I've been doing this radio show with Randy now for 17 years now, and we've caught massive bull markets. The biggest bull market in history was the bull market we called back in 2000 when gold went from $250 all the way up to $1,900. We have clients that literally became multimillionaires because of that. On top of that, there's going to be opportunities in the currency market. When gold hit 1900, the U.S. dollar was all the way down to its lowest level of 72 cents. And we rode that 72 cent U.S. dollar all the way up to $1.03 that it's at right now, and soon going to be $1.10 to $1.20. We've got an opportunity to make a fortune in these markets. I want you with me going into 2017. We can turn your entire financial life around. Just give me the opportunity to explain to you how we do that so you too could be in the right markets at the right time.
1-800-432-1022. 1-800-432-1022. Call Harold. He will speak to any of our radio listeners. personally, privately. The call is free. Anything discussed, confidential. His website, rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. And that is the question. How do we invest today so we can retire tomorrow? And that's why we do our radio show. Call Harold. He speaks with people like yourself, many listeners every week, and we'll be happy to talk to you. 1-800-432-1022. The website is rarecoloreddiamonds.com. We'll talk about diamonds in the second half of the show. Our featured diamond this week, it's a beauty. It's a big one, too. A 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. You can see it online at rarecoloreddiamonds.com, featured diamond of the week. And this is a big, chunky yellow diamond. It looks absolutely spectacular. One of the stories we definitely want to feature on today's show because it goes hand in hand with what Harold is talking about. The Canadian dollar could drop to 65 cents U.S. in 2017, according to Macquarie. Higher interest rates in the United States are a major factor that will drive the loonie down, the bank says. After a rough 2016, a currency prognosticator at a major investment bank says he expects more pain for the Canadian dollar in 2017, predicting a low of around 65 cents U.S. in the next 12 months. David Doyle of Macquarie Capital Markets Canada says two major factors are going to conspire to drag the loonie down almost 10 cents lower than it currently is at around 74 cents U.S. over the next year. Interest rates and the price of oil. The biggest factor in Doyle's analysis is the sudden divergence in monetary policy between Canada and the United States. In the United States, the Federal Reserve hiked its benchmark interest rate last month and is signaling that it expects to do so again at least 3 more times in 2017. The Bank of Canada, meanwhile, is saying loudly and clearly that it has no intention of following suit. Economists are expecting the bank to stay on the sidelines through 2017 at least, and if any action does come, it will likely be a rate cut, not hike. Divergence in monetary policies between the two closely tied countries is rare, so when it happens, the impact tends to be very large. Higher rates in the United States will drive up the value of the U.S. dollar versus everything. Couple that with lower rates in Canada, and you'll have a recipe for a cheaper loonie. The Bank of Canada, we think, is either going to go on hold or even cut rates, Doyle said in an interview. That divergence pushes the Canadian dollar lower and into that 65-cent level. Another big factor that will be very familiar to Canadians is the impact of the price of oil. Currently, oil is changing hands around $52 U.S. per barrel. Doyle assumes the price of oil will increase slightly over the next 12 months to about $57 U.S. per barrel. Normally, that would drive the loonie higher too, but in this case, a modest increase like that won't be enough to offset the impact of interest rates. For now, the House view is that the oil price is unlikely to go above 60, Doyle said. If crude oil were to move well above 60, then we'd have to update and revise to incorporate that into our loonie call. But Macquarie Group coming out and saying 65 cents on the Canadian dollar in 2017. Now, we had talked in the past, in 2016, on our show about Jared Dillian, and it's worth remembering Jared and his call as we start 2017. Jared said, get long the United States and short Canada. Troubles brewing in Canada. The Canadian dollar will continue to drop. The Canadian dollar is facing major headwinds. Dillian notes it's likely the Fed will raise interest rates while the Bank of Canada will cut rates if they move at all. This dynamic will put pressure on the already weak Canadian dollar. He goes on to say that Jared believes the Canadian dollar could move to 160 to 170 to the U.S. dollar. And right now we're trading at about 132, right in and around there. He believes the short in the Canadian dollar is one of the best macro opportunities over the next couple of years. And Harold, we have about 2 minutes left in our segment here, but you've said this for quite some time. And we have some major calls coming out agreeing with you. Macquarie Group, Canadian dollar 65 cents. Jared Dillian, Canadian, going to 160 to 170 against the U.S. dollar. Now's the time. Do not delay to shift Canadian dollars into U.S. dollars.
You bet. Again, soon it's going to be very close to the fact that it's going to cost you 2,000 Canadian to buy 1,000 American. Now, again, you know, if you're traveling to the U.S., it's going to be harmful for you. But if you're in the right market and you've hedged it the way that I'm going to show you how to do it, you're going to be able to travel, you're going to be able to spend money, you're going to be able to be in phenomenal financial shape. All you need to do is do it. So, again, moving into 2017, we have tremendous opportunity, and I want to make certain that the listeners to our show are on top of this, because this is one of the biggest trends that we're ever going to get a chance to trade that is similar to the trend that we caught in gold when it went from $250 all the way to $1,900. This is a comparable move, and we can make a fortune of money on this.
I remember back in the early 2000s, it was my parents' 40th wedding anniversary, and we went to Maui to celebrate. And the day we were leaving, George W. Bush was being inaugurated. The Canadian dollar back then was 64 cents. Now, we went on that holiday and we held our nose because it was a very special occasion for our family. But I remember that very distinctly. George Bush being inaugurated. We're about to head to the airport and head back to Edmonton. Canadian dollar at 64 cents. And then over that period of time, I started doing the show with Harold in February of 2002, and we saw the Canadian dollar strengthened to par and even go a little bit beyond par with the U.S. dollar. And here we are today with the Canadian dollar around 74, and people like Jared Dillian and Macquarie Group saying it's going much lower. Harold Siegel saying it's going much lower, all the way down to, once again, 64, 65. It was there before in the early 2000s when George Bush was starting as President of the United States. Definitely it can happen again with the scenario we see. Get the information you need to start making money today. Speak with Harold, 1-800-432-1022, 1-800-432-1022. His website is rarecoloreddiamonds.com. And we're going to come back and talk about our featured diamond of the week and the diamond market in 2017 and what happened in 2016. It was an amazing year. Be back on the World Financial Report on radio with Harold Siegel and me, Randy Marshall, right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on December 29th, 2016. Our time is 9:30 Mountain. Our radio show runs on 6:30 CHED, Sunday afternoon at 3. If you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. We're also on TuneIn. We have our own YouTube page, and 6:30 CHED is on Apple Music. So we go anywhere you do. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. Get our free weekly newsletter. This is the companion to our radio show. It's sent out prior to the show. You can be going through the material as you listen to the show, and we will be happy to send it out to you via email free of charge every week. Now you'll be able to read that story we touched on in the first half of the show. The Canadian dollar could drop to 65 cents U.S. in 2017, according to the Macquarie Group. We'll be happy to send it out to you. All you need to do is connect with Harold. Our featured diamond of the week from rarecoloreddiamonds.com is a 2.09 carat emerald cut, and this is a fancy, vivid yellow, internally flawless. This is a big, chunky yellow diamond. It's absolutely gorgeous. You can see it online at rarecoloreddiamonds.com, featured diamond of the week. Last week, Carol, in our newsletter, we had CNN, an article that they put out saying that 2016 was the year of colored diamonds, rare diamonds. And it really was the year of colored diamonds because at auction, blue diamonds took center stage and did so well. We also had pink diamonds doing well. It was just an amazing 26 for the diamond market, the rare colored diamond market. And we expect 2017, as we get closer to the mine shutting down in Western Australia, the Argyle mine that produces 90 to 95% of the world's pinks. As we get closer to that date, this market is going to get more and more interesting day by day, Harold.
Oh, you better believe it. Again, the diamond market did tremendously well in 2016 and did tremendously well, especially blue diamonds. You know, for the last decade, they've done unbelievably well. So we're very, very happy with that, obviously. Let's talk about the featured diamond first because it's an extremely rare diamond. You know, there's many different colors of yellow. And when you determine the value of a diamond, one of the things is the color. Now, not only is this diamond yellow, but it's a vivid yellow. And it's got the highest saturation. So of all yellow diamonds, this diamond would turn out to be one of the most expensive because that it's vivid in color and extremely highly saturated. So forgetting about the faints and the very, very lights and the very light yellows and all that, let's talk about the important color yellow diamonds. Fancy yellows, fancy intense yellows, and fancy vivid yellows. So those are the three strongest colors. And this particular diamond is vivid, which makes it extremely rare. But then on top of that, let's look at the clarity of it. It doesn't have any flaws. It's internally flawless. So you've got a diamond that is the best color that you could possibly get in yellow, vivid yellow. Then on top of that, it's got a perfect clarity. It's internally flawless. So that's extremely important. And then let's look at the cut. It's one of the rarest cuts that you could ever get. 80 to 85% of most diamonds are cut in square cuts, which are called radian cuts, or cushion cuts, which are just square cut diamonds with rounded edges. They're the easiest diamonds to cut, and they show the color very, very well. But the odd time that you get a very rare and amazing diamond, and you can cut it into an extremely rare cut like an emerald cut, then you end up with a diamond like we're featuring this week. So this diamond is so rare because round diamonds and emerald cuts are the rarest cuts. So this is very rare because of the cut. It's extremely rare because of the color. It's a vivid yellow. It's also extremely rare because it's internally flawless. And then take the size of it. It's over 2 carats. It's 2.09 carats. And it's important that you understand that only one diamond in 15 million is over 2 carats. And that includes all white diamonds and everything else. So the chances of ever getting a diamond like the one that we're featuring this week is extremely slim. It's pretty well perfect in every possible way. It's over 2 carats, so it's extremely rare because of that. It's internally flawless. It's an emerald cut, and it's vivid yellow in color. It's just an absolute amazing diamond that if held on to, and diamonds are meant to be held on for a long period of time. You don't buy a diamond and sell it in a couple of years. It's not that type of investment. You know, when you go into a retirement savings fund or whatever, you're looking to go in for 20, 30 years, sometimes longer. If you're in your 20s and you go to work and you can put money away in an RRSP, you know, you could hold on to it for 40 years. Similar with the diamond. I've said many, many times about diamonds that we know of that over a 50-year period have gone from 50,000 to 5 million. We've seen returns on diamonds that are absolutely astronomical. This year in 2016, year that just passed, Shirley Temple's diamond was bought by her father in 1940. So that was 67 years ago. However, 77 years ago. However, that diamond was originally purchased in the family for his daughter, obviously, for Shirley Temple for $7,100. That diamond sold in 2016 for $25 million. So an asset that was purchased for $7,100 sold for $25 million. Now, the thing about owning diamonds is that in a lot of cases, you don't want to cash them in. You want to pass those down to your kids and your grandkids. That's exactly what I do with my diamonds. If I don't need to sell my diamonds for retirement purposes, I'm going to keep them in the family. I'm going to give these to my children and grandchildren because they do better than stocks or mutual funds or almost any other investment. You've seen returns in 2016 for blue diamonds, for example, that have been absolutely off the charts amazing. We've seen blue diamonds in 2005 sell for $200,000, and now in 2016, have the same diamond is sold for $4 million. That's how much these diamonds have gone up in value and will continue to do so. Also, you don't need to spend multi-millions of dollars to buy a diamond. You could buy a $20,000 yellow flawless and put that diamond away for 20 years, and you're talking about a diamond that will sell in the high six figures eventually. So, again, it's that type of asset. Also, the other thing is all of my clients that own diamonds are invested in the U.S. dollar because diamonds are priced in U.S. dollars. So the fact is that if you own an asset like a diamond and it goes up by 15% a year, that's the actual diamond that's going up that much. But factor into the currency and see how much more money you're going to make because that diamond is actually held in U.S. dollars. So all in all, rare colored diamonds, a phenomenal investment. 2016 was a monumental year for blue diamonds. They sold for the highest prices ever, and we anticipate that that will continue to happen. Because aside from the United States, almost every country out there is doing terrible. And the fact is that the people within that country are not doing well. So the opportunity to buy an asset like a rare colored diamond that is portable private wealth, that never declines in value, that over the long term will go up more than any asset that you own, is a phenomenal time to get involved in those markets. And let us show you how to do that. Again, just looking at the featured diamond this week, it's one of the rarest yellow diamonds ever, and that diamond will do nothing but go up in value. And again, you can get involved in yellow flawless diamonds starting in and around the $20,000 level and just put them away for a long period of time, and you'll do great with them, along with the fact that they could be sold in other currencies, which is a huge benefit. Randy also mentioned at the beginning of the second half about the Argyle mine in Western Australia. Why is that important? Because the Argyle mine is the only mine in the world that produces 95% of the pink diamonds. It's a very small number. It barely fills a champagne flute. But you're talking about the most concentrated form of wealth on earth. To own a pink diamond today is a true rarity, and those that own them have one of the best assets that you're ever going to find. However, on top of that, the mine, the Argyle mine, is about to close down. It's saturated. It's not producing hardly any diamonds anymore. At one time, it produced 30 million carats a year. Now it comes nowhere close to that. And out of those 30 million carats, those were not investment quality diamonds. Those were white industrial type diamonds. You want to own pink diamonds from the Argyle mine. The mine is going to close in 3 years, and if you're one of the fortunate few to own one of these diamonds, I would say the returns on those diamonds will be higher than almost any asset that you have ever owned. So, again, the diamond market is el fuego. It's on fire right now. It's going to continue to do so because with interest rates at zero and soon to go into negative rates, these assets go up by 15 to 20% a year. There's no other asset available in this world today that will do what a rare colored diamond will do today.
Featured Diamond of the Week, and you can see it online, rarecoloreddiamonds.com, featured diamond, 2.09 carat, emerald cut, fancy, vivid, yellow, internally flawless. When you go to rarecoloreddiamonds.com, take a little time and look around. It's like going to a museum online with the world's greatest rare-colored diamonds. And if there's something there that you're interested in, obviously there is the opportunity to invest. Right now, those diamonds are in rarecoloreddiamonds.com's vaults, but they can be easily taken out, and an investment can be made on your behalf. Obviously, connect with Harold, 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com, and take a look at our featured diamond of the week. One of the things that is very important when it comes to the pink diamonds is the fact that, sure, they are rare, they are scarce, but they continue to rise in price. Rio Tinto, they saw a record price for their diamond tender. The diamond tender comes out every year, and in 2016 it was no different. They traveled around the world. Different diamond ateliers had the opportunity to bid, take a look at the diamonds, make a bid, a sealed bid, and those that had the highest price for that specific diamond were the ones that won the bid. And Rio Tinto reports that the annual Argyle Pink Diamond Tender was a huge success, with this year's tender achieving the highest average price per carat since its inception in 1984. Now, Rio Tinto's Argyle mine really produces virtually the entire world supply of rare pink diamonds, with the finest of a full year's production showcased in the pink diamond tender from Argyle. The 2016 tender, it comprised, and when you think about it, we've shown this before in a flute glass, a champagne flute glass, half full. That's it for the entire world. This year, the collection was 63 rare pinks, red and violet diamonds from the Argyle mine, named the Chroma Collection. But think about it. The entire world, 63 rare diamonds. That's the rarity of this market. Fills a champagne flute halfway. You could probably put all those diamonds in your hand. It's like having a Rolls Royce in your hand, in a sense. Rio Tinto reports that the diamonds were all of the highest quality, size, and color composition in the tender's 32-year history, and were highly sought after, with the winners from 10 different countries, including a strong representation from the very sophisticated U.S. collector market. The centerpiece of the collection was a 2.83-carat oval diamond named the Argyle Violet, and the largest and most valuable violet diamond ever discovered to date from the Argyle mine. The Argyle Violet was reportedly sold to U.S.-based colored diamond specialist L.J. West. Now, normally, these things are kept private, but if somebody wants to advertise the fact that they have made an investment in a diamond like L.J. West did, obviously they can. And they are currently showcasing that diamond at the and this is something you can check out if you're going to go down to Los Angeles, a brilliant exhibit at the National History Museum of Los Angeles. It's the Rare Brilliance exhibit, and Rio Tinto obviously is very pleased with the fact that the tender, and this is a very important point to make, the diamonds sold at tender have appreciated over 300%. That, according to Argyle Diamond manager Josephine Johnson. The market fundamentals for pink diamonds remain very strong as a result of extremely limited supply continuing to support their significant value appreciation. But, Harold, that was a story that we had towards the end of the year of 2016. It bears noting because here we are in 2017, and we will wait until usually October, somewhere around there, they release the tender results. But the tender itself will be initiated somewhere late in the summer, in August, and they will take those diamonds around the world. And it's a beautiful thing. I know that you've been involved in the process, and it's something that is very, very special.
Better believe it. It's really the highlight of the diamond market for the year, the Argyle tender. I know Larry West very well, and I've bought many diamonds from him over the years. He's a very knowledgeable man, and he certainly bought, I think, the class of the tender this year. That was a really outstanding diamond. I've got some violet diamonds in my collection, and they really, really are something special. I mean, some of the colored diamonds that we have in our collection are like something that you could never see. And we've displayed them before on Rare Color Diamonds' website as featured diamonds. Some of my favorites are the bluish greens and the greenish blues that take on almost an aqua color. I think we had one 3 or 4 weeks ago, Randy, that we just couldn't stop talking about because the color on them was like nothing you've ever seen.
Mm-hmm.
It's almost the color of the ocean in Tahiti. That's how magnificent some of these diamonds are. So all you have to do is look at them, hold them in your hand to understand the true, value and rarity of these diamonds and why they are nature's art. I mean, these are the most beautiful diamonds on earth.
And that diamond, Harold, I still have it here as a reminder, was a .25 carat radiant cut, fancy, vivid, bluish green. And you see it, and it just blows you away. It is absolutely gorgeous. Is that diamond still on the website?
The diamond is still available, but it's not on the website.
Okay. But if somebody was interested in that .25 carat radiant cut, fancy, vivid, bluish green,
yes,
ask Harold. He'll be able to send you a picture of it, and you'll see the color. We had it as a featured diamond. We also had another .33 carat radiant cut, fancy green, and the color on that was just absolutely gorgeous. One of the things that happened in 2016, the Aurora green sold for a record price, if I remember correctly. It was around $18 million. And that was something that, Harold, you were excited about because you were really starting to see the market in green diamonds come to the fore. We know about, obviously, the rarest of the rare, the reds and the blues and the pinks. And the yellows you're very bullish on. We're very bullish on the greens. And then when we had that Aurora green sell for a record price, it really reaffirmed what you've been saying for a long time. Look at the green diamonds that are out there because those could be the real winners of the future.
You better believe it. Again, they're going to be the next blues. In fact, we just cut the only green flawless diamond ever. There's never been a fancy green flawless diamond. We just cut one, and we're actually going to put it into a ring with two vivid orange diamonds on the side of it. So it's going to be a museum quality piece. But green diamonds are the next major trend. As I illustrated before, blue diamonds in 2005, vivid blues were $200,000 a carat. Now they're over $4 to $5 million a carat. We believe the same thing is going to happen with green diamonds. One of my jobs is to determine trends like we did in gold and silver. Gold from $250 to $1,900. Silver from $3.80 when we recommended all the way up to $50. Oil from $18 all the way to $150. We caught currency markets that made some of our clients fortunes, and now we brought you pink diamonds, which again, the Argyle mine is going to close in 3 years, and we feel our clients that own pinks are going to make a fortune off of that, or very high returns. And now we're looking at the trend in green diamonds as possibly the next major bull market in diamonds. I think that they're going to skyrocket and continue to do so. But greens, you could almost get in on the ground floor because green diamonds turn green because of uranium in the ground. So a lot of them come from South America, around the Venezuela area, and that's where my partner's family is from, and actually mine these diamonds. So we mine our own diamonds, oranges and greens and yellows and some blues, but the greens are the next major trend, and that's where major money is going to be made. And don't forget, they're also priced in U.S. dollars, which is also going to add 30 to 50% to the bottom line when we eventually sell them.
One of the featured diamonds we had a few weeks back, and it's definitely worth mentioning again. It was a 1+ carat radiant cut, fancy, intense yellow green. And if you're interested in that, you can definitely speak with Harold personally and privately. But some of the diamonds that we featured this year as the featured diamonds for the radio show have literally been off the charts. As we had that 0.68 carat radiant cut, fancy green blue that took everyone's breath away. We had a 0.25 carat radiant cut, fancy vivid bluish green, and that was absolutely gorgeous. We also had that 0.33 radiant carat. It was 0.33 carat radiant cut, fancy green. These are some of the diamonds that Harold is obviously offering for investment purposes. And if you're interested in getting involved in this market, there's only one person to talk to. That is Harold Siegel. RareColoredDiamonds.com is the website. Telephone number 1-800-432-1022. When it comes to the Argyles, we featured this year .96 carat radiant cut fancy vivid pink argyle, also a .81 carat emerald cut fancy vivid purplish pink. And purplish pinks are very, very popular as well. And today's featured diamond, this is one that you can speak with Harold about. It's a very large diamond. It's a .209 carat emerald cut fancy vivid yellow internally flawless. You can see it online at rarecoloreddiamonds.com, rarecoloreddiamonds.com, featured diamond of the week. And Harold, one thing people want to do is get that story that we featured at the beginning of the show, Macquarie Group coming out saying a 65-cent Canadian dollar is on the way in 2017, based on the fact the United States is raising rates. We will not be raising rates. The anticipation is the states will raise rates 3 times. Canada, static or possibly a cut. And if we're headed for 65 cents, you want to move into U.S. dollars now and make an investment in a diamond now. You'll obviously benefit from the currency, but as well the rarity and the scarcity, the price appreciation that goes along with that. And we have about 2 minutes left.
You bet, Randy. Again, it's a big, big play in the U.S. Canadian dollar, and we want to make sure that our Canadian clients are into that because, again, there's a lot of money, and these opportunities do not come around very often. So you want to own U.S. dollar-based investments. You want to get out of Canadian dollar-based investments. We've been saying this going on for 4 years now, and, again, a lot of my clients are in these investments with us. They're not only making heavy returns on the currency, but they're also making heavy returns on the private investments. Let me show you how to do that because, again, we work way too hard. And don't think that you need to be a millionaire in order to invest with me. You don't. Most of my clients, everyday hard-working Canadians that just want to do better than 0.5% in the bank and being forced into a very risky stock market, we don't want to see that happen. There's alternative ways to make money, and that's what our business is. We're into the alternative asset business, and the fact that Randy and I are both Canadian, and our show has been on for almost 17 years now, we want to make sure that our Canadian clients are in the right investments at the right time and not suffering like most of the world is doing right now.
It was interesting to note, we have it in our free weekly newsletter, King World News, reporting that one major financial firm, the chief strategist from Raymond James, chief investment strategist Jeff Sott, recommending that people return to real assets. He feels that in 2017, real assets, diamonds, things of that nature, hard assets, are going to do very, very well. Take a look at our featured diamond of the week. It's a 2.09 carat emerald cut, fancy, vivid, yellow, internally flawless. See it online at rarecoloreddiamonds.com, rarecoloreddiamonds.com, featured diamond of the week, and definitely get our free weekly newsletter from Harold. This is a story you must read. Canadian dollar could drop to 65 cents U.S. in 2017. Macquarie forecasts. David Doyle of Macquarie Group saying 2 major factors are going to conspire to drag down the loonie by 10 cents. We're around 74 now, and he's talking about interest rates and the price of oil. Jared Dillian coming out and saying the Canadian dollar could go to 160, 170 against the U.S. dollar. Harold, thank you for your knowledge and another great show to start off 2017.
Well, it's my pleasure, Randy. I loved working with you all the way through, and 2017 is going to be another great year. We wish everybody, all of our listeners and friends and clients, a very wonderful weekend and a very profitable day.
Yes, Happy New Year and happy 2017. Connect with Harold, 1-800-432-1022. RareColoredDiamonds.com is the website. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.